Good morning. My name is Adam Kahn, and this is The Rational Investor. I hope you're all doing well today on Fed announcement day. I'm sure we'll see a quarter point increase, but we'll wait to see what the rhetoric is and what they say in terms of that. My thought is they'll still try to scare the markets and make it sound like inflation's an issue and everything else. I'm not sure I'm on the same page as them. I think inflation is beginning to get more in control. I know nobody else seems to feel that way. But things have slowed legitimately. And sometimes it just takes time for that to hit the numbers and the stats that they look at. I have a rental property that the renter just let me know that they're going to be moving, so it's going to free up. And I don't think I'll be able to get the same rents I was getting before. And I'm guessing I'm not the only one. So as tenants begin to move out, I think you'll see rents come down. I think similar with housing. There are people who are upside down. There's a natural flow. Some of the people who bought investments towards the end and aren't making quite what they think, hopefully they're in good financial positions to make decisions of what they want, but they'll have to make decisions of, am I going to lose whatever it is per month to hold on to the property, or am I going to put it on the market and hope to get it sold? And as some of those things start to come to the market with the slower market, that probably puts a little pressure on prices as well. So it's hard for me not to see things continue to slow and prices come down. I know the auto industry is beginning to do incentives as well too, which tells me the same thing there. So I'm guessing it's everywhere. I'm a little confused as to why the Fed feels the need to continue to raise instead of letting it play out, but maybe their goal is to make it happen quicker by continuing to press the needle. In the mortgage industry, I kind of wonder if the margins will compress a bit as opposed to rates continuing to go higher. I'm curious to see what happens today and tomorrow in terms of our pricing and rates and everything else, to see if they're really trying to choke things and push the rates up into the eights, or if they'll let it slowly play out, because I'm guessing they're aware that the economy's slowed too. It's hard to imagine that they don't have a gauge on what's going on. So that's a little why I'm confused as to why they feel the need to continue to press. But maybe that's just my selfishness of not wanting to see it slow further. What I can tell you is I've definitely noticed that realtors and lenders are beginning to get, pressed in terms of commission-based and whatever else, that they're getting stressed, and that's coming out in personality. Some of them are getting really frustrated and a little bit angry. And my suggestion is, if you're not long-term and this isn't your career, well, maybe it is time to look for something else. The easy times or the busy times, I think that's gone for a long time. So if you're not surviving in today's market, well, and if you need an income, maybe I'd look for a job or something that pays a salary instead of something that relies on the sales. I know there's been a lot of attrition. I figure it'll continue, and we'll see what the markets do. I think the new home builders might be a good indication. We probably need a 10 or 15% price reduction, and then we'd need rates to come down into the high fives, low sixes again to build up buyers and start to get people interested. But I don't think you're going to see rates drop into the fours or threes like they did in previously. I think that was an anomaly that we're unlikely to see again. And I think sometimes that once-in-a-lifetime opportunities really are once-in-a-lifetime opportunities. I don't think what we've seen in the inflation completely reverts back to deflation. I know there's a lot of real gloom and doomers on there that see, the economy collapsing and everything else. But I think at least right now the Fed has a good gauge, and Powell's done a really good job. I'd hate to see where they go so far that they push too hard and really cause some real damage. Because from what I've seen in terms of charts of things like unemployment, the amount of time it takes to build that back is really damaging. If companies let people go, it takes a long time before they're comfortable rehiring, and those people who lose their jobs get stuck in a really bad position. I think right now, with people stretched and jobs still strong, it's okay because the economy's still strong. If they really push, it's already going to be where you're going to start to see some companies' earnings start to falter, and maybe some smaller companies start going out of business. I think it'd be a mistake to push so hard that the big companies start having trouble again. You see earnings fall and them have to make some really tough decisions, because bringing that back to life takes a long time, and it just doesn't make any sense to beat the country down like that. Now, maybe they don't see the things that I see. Everybody has a difference of opinion. They have really good data. I just think sometimes, they even recognize the data is 6 to 12 months behind. Maybe they need to give it the 6 to 12 months and relax a bit. But again, I'm not on the Fed. It's not my decision. I just think we're already in a position where you're going to see prices begin to slow down and housing begin to drop, which seems to be the shoe that they're waiting for. I'm not really sure that I see oil spiking back up unless I'm missing something. I know I heard that inventories are low, but I'm guessing demand has faltered as well. I think industry is just a little bit slower, which was the goal. I'm guessing we're not down to a 2% inflation, but maybe we are, which is why you need to give it that time to relax. So I'm actually more interested personally to see what Meta earnings come out like today. We had Microsoft and we had Google yesterday, at least pre-market right now. Google seems to be looking like it's going to go up a good bit. Microsoft down. They both had really good earnings. I'm not a financial planner, so don't take my advice, just my personal opinion. I think Microsoft being $10 or $12 lower, if you don't own it, it's a good time to start picking some up. With the recognition that it might drop another 10 or 20%. So I'd be prepared that if it did, could add on, and if not, I just have less than what I'd really want. I'd be putting in 25% of whatever I wanted to buy today, and then going from there as the stock goes. And if it goes up and up and up, well, at least I have some. And if it starts going down, I'll be able to add on another 25% as it gets down to, 310 or so. And if it gets below 300, I'd probably be looking to pick up another 25%. And God forbid it drops to like 250 or something, I'd have my full position in. So, again, I'm not a financial planner. Don't take my advice. I just like to talk. Sometimes it gets my own opinions out so I can think through my strategies, and you guys don't have to follow that. Any of you who are watching my Rivian trade, boy, I hope you guys held on and are finally seeing that work out well. It's back up in like 26, which I love to see. Pretty cool. It just took a long time. That's about it for today. Feel free to chime in, make some comments, give a hurrah, thumbs up, subscribe, all sorts of stuff. I hope you're enjoying my shorts from our trip to Asia. Whenever I have a chance, I'm going to try to edit some of those. I just have so much, I'm overwhelmed, and maybe post some videos as well. You can check out my other channel, Cooking with Adam Kahn and Lee Ju, where I'm posting some of that and hoping to get back to some of my cooking stuff. So have a great day. Bye-bye. Need to turn it off.